Welcome to Your Bit Solutions. This video is a part of the series regarding managing your finances using Excel. In our previous video, the segment number 4, we covered the journal design and its implementation in the Excel file. If you haven't watched that video first, it's highly recommended that you watch that video before you continue on to the current video, because a lot of the principle that we developed in Excel to cover our journal design will simply be extended to implement the ledger design. The link to that video and the link to the other videos in this series are in the description below. So if you recall from the previous video, a journal is a record of various financial transactions coming from your various account in a tabular form. The ledger also work on the similar principle. The one key difference between ledger and a journal is that the ledger only contains the entries coming from a given account. That means your bank account will have your bank ledger, your income account will have your income ledger, and so on and so forth. The key benefit here is that because all the entries belongs to one particular account, the running balances on those accounts can be calculated as they happens along with your business transactions. And if you have some experience working with the accounting entries, so you probably know that many companies will first enter the information in the journal, and then they will take the same entry and put them in the corresponding ledgers to update or synchronize their running totals. But because we are using Excel, we don't have to do that. So our rule of the game is you only enter once. You can either put your transaction in journal or in the ledger, but not in both, because we will be using Excel formulas to sum their respective running accounts totals. So there's no need for duplicate entry. Other thing that you notice that we already implemented in journals, that we follow the traditional double accounting system. The user will enter the transactions manually, which will affect on the both sides, and user will be responsible to make sure that the trial balance is intact. We also added an optional way of combining the sales tax into the base expense or invoice entry, but it still would be considered as a one-dimensional because that row of the data is only affecting either the credit side or the debit side, not both. And to make sure we understand, here's what, just to recap what we already implemented. Example here remains that you earned $100 by selling something and you charged $13 taxes, and your bank account was incremented by $113. So the statement is balanced because the 113 on the debit equals to the 113 total on the credit side. So each of these three rows are affecting one side. Each row affects one side of the first row affects the debit side, second credit, third credit. Now there's an option that you can combine the 5 and 6 into one row worth of the entry. Both methods are acceptable, but it's still one dimensional because 113 total, 113 in the taxes are going to the credit side. And the reason why am I emphasizing on it? Well, because you will soon see that this approach will be changed how we address the ledger entries. So what is different in our ledger work? So for our ledger, you have an option that you can either enter the entries similar to how the journal records them, or you have an options to pick up the second account in the same row as well. That way the balancing the debit or credit against the primary entry will be done by the Excel automatically. And that does provide some sort of automation in the system and ease for the user entry data. And similar to what we did for the journal, is also an options to add the sales tax in the same row as well. So this is how it will look like in a ledger model that we will be just developing. Because all these entries, the entries here belongs to one account and the account name goes on the top. So all the debit and the credit and the balance entry that goes in the table will belongs to the account, and it will get summarized up in here. Now, as a second option, you can provide a second account. Then the balancing entry for your debit will be entered as a credit in the second account that you specify. So everything can be handled on the one row. As an option, you can just specify the tax rate or a manual entry of the tax. That way that the 113 goes to the bank in debit, the sales account gets the credit for the same amount, for the amount the gross minus the taxes goes to the sales, and the $13 taxes will goes to the tax payable account. The all items are handled in one row of entry. Alternatively, if you do not like the taxing system, you can still go and complete this in two rows worth of the data. First one would be you will enter the $100 that goes to the bank, and the balancing will goes to the sales, and it's the statement is you're balanced, and then you can deposit the taxes as a separate entry and then provide the balancing account name here, so that the debit for the bank is covered and the credit for the sales tax will also be covered automatically. So that's the goal of implementing the ledger system into our solution. So before we dig into the Excel portion of the ledger design, we do have a one humble request. If you like the content that has been provided to you so far, please consider liking our video and subscribing to the channel. It will immensely help us. At the same time, we'll make sure that you remains updated regarding whenever the new video is posted on the channel. So let's start building the solution. Our ledger design, first walk through the column AB, where we always stores the sheet specific information. The first entry here is the trial balance. That's something we would implement later, so there's no need to focus on it right now and you can ignore it. The next entry here is the sheet type. It has to be a ledger because this sheet is where we're designing a ledger. It's a template for our ledger type. Then T account is the account name that this particular ledger is representing, and this T account is coming from all our account names that are available. The recommended number here is that you should use a bank or a credit card information account. Depending upon what account is selected here, we fetch the debit and the credit sign from our design T accounts. So this would be the account choices, and then those would be the corresponding debit and credit entry that we are fetching using XLOOKUP. The required column here is exactly the same that we did for our journal design. Status is also similar, except for the journal we were fetching the our table from complete and pending, because those are one-dimensional allowable entries. In this particular case, because ledger is a two-dimensional design, you can only have either the complete entry or the reconciliation entries. Those are the two true values, and it's just filtering our requirement accordingly into complete and reconciliation choices. The user accounts availability, exactly the same how we did for the journal, so there's no change. So let's focus on this, the header or the row above the header of our primary table. The first two would be our what are the debit and the credit sign for this particular account. They are simply copied over from here. Note that these are just the number, and I just implemented the conditional formatting to show the prefix number with the debit and the credit. This is how we did this in the in video number 2 is in detail I explained how to achieve it, but for now you can just keep in mind that these are mathematical number and not the text entries. They are just displayed as text. So that is carried over from here. Now if you look that it's also using an if statement with this flip entry, but if the flip is true, that it will flip these two numbers here. Why do we need it? For now, let's not focus on it. This is something we will cover when we cover the tutorial. For now, you just assume that this does not exist. So debit is the debit entry and credit is the credit entry. The other two entries here that we are storing the name of the account in the same column where the table account is defined, and then we also put a permanent complete status in the same column where we are defining this entry in the table for the status, and total is here. We will calculate the total using debit and credit entry in a moment. Before we do that though, let's cover our check entry. The approach for the check entry here is, if this particular row of transaction pass all the checks, then this entry would be either 1 or 0 if some of the checks has been failed, to make sure that any 0 entry does not get added up in here. So we will only mark the complete entry transaction into the net sum of the running balance of our account. So what checks do we need to make sure that it passes all the checks for this particular row? The two condition. If you're putting the reconciliation, then you cannot select the account because it's a reconciliation. Or if you're putting complete, then the account has to be selected. So those are the two conditions that has to be specified. And how can we implement that? That would be simply using the if statement. If with the two or conditions, and we can put or. Now each of the two or conditions itself are and conditions for each entry, which means the first choice is an and of when the status is equal to complete and the account is a valid, which means the entry in the debit side is not equal to 0, which is by design. If you don't put an account number, this entry goes back to 0, so it will fail that test. So this is the first AND condition. What is the second AND condition is if the status is equal to reconciliation, which is the second entry here, then the account has to be empty, which means the debit column has to be equal to 0. The two things I forget is for both of those entries, make sure we press F4 to convert them into the absolute references, because those are copied formulas in our table rows. So those, if both of these OR conditions are satisfied, that means that it's a valid transaction, then we will print 1, otherwise we will print 0. So that we can check. Oops, I forget one parenthesis in here, sorry about that. That should be fine. So now you can see that if you're marking complete and account is specified, it satisfies, but if your account is empty with the complete, then it fails the test. Conversely, it has to be, if it's a reconciliation and account is 0, it passes the test, and if you select an account, then it will go back to 0. And while we're at it, let's put some conditional formatting on it. That highlight is if it's equal to 1, then change it to the green color, and let's put the other condition. If it's equal to 0, then convert it into red entry. So here, let's just say mark it good. You could see that it's gonna go back to 1. Other thing we can do, we can even change that to a flag display using conditional formatting. You can say manage a rule, and you can we can add one more rule here where we can specify it like a icon set, and maybe the green and the we will show green flag when it's good, when value is 1, and 0 otherwise. And we can also say show on icons only, and the answer if it's greater than or equal to 1, which would be a number. And then we don't show here we don't have any middle condition, and the I'm sorry, the first condition is 1 and other condition would be 0. And then it tells you that now you can see if the value is greater than or equal to 1, it will show a good sign, and if it's a less than 0, then it should show that it is a, if it's less than or equal to 0, it shows it's a bad. So that will take care of it, and that you can see, and the moment we mark them complete, they will be marked green. So that's a good visual display that it's passing all the checks. Now what we have to do is let's update the running total, and the running total is basically what we would do is sum up all the debit columns, but we will use a product of each entry to the corresponding check number, because if the check fails, that means answer would be 0, then this row will not be added in our sum. So that way only the valid entries will be updated, and that we can do by using our first is the sum product, and it will be sum of all of our debit column, and the multiplying it by the corresponding check table. That would be sum of all the valid entries in the debit, but then it has to be multiplied by the debit sign, which would be multiplied by the debit, F4 for the absolute, and repeat the same process for the credit side, which would be sum product, and you select all the credit entries, and select the product entry for our check array, and then multiply it by the corresponding credit sign and press F4 for the absolute entry. So that way you can see that if it's it's only the first entry here, or even if we delete this one here, only the valid entries will be the one that it will add. Like for example, it will be only 113 because that's the only transaction that passes all of our checks. So that does take care of our check process. Quarter entry here is the coming from the date, exactly same as the journal design. You can look back into that video if you regarding how this formula was developed. We covered the debit, we covered the credit. Now let's cover the balance. Now running balance is more of a visual show for the user here. This is not something we carried over into our trial balance, but it's a good reference information, and all it's doing is the cumulative sum of in each row. And the way we do that is it's the sum of the first cumulative column multiplied with a cumulative sign on the top here, and vice versa for this column. And I can quickly rediscover that if this would be helpful. So all we're doing here is that for the cumulative sum, all you do is equal to, you have to select from the header and then the header, and then manually enter the range, which would be the debit, because remember debit is it points down to the current row. So if this is the current row here, then the sum will be all the way up to this particular row. So that would be the range, and we forget to put sum in the beginning. So that would be sum for the debit, and then we have to multiply it by the sign of the debit entry, F4 for the reference, and add the other side. Same approach. I'm sorry, did not put the sum again. Plus sum, and then we click the credit column and manually type the range because we want the tabular notation to be maintained. Multiply by our credit sign, F4 for the absolute reference, and that should take care of it. And you can see that these are the numbers that we keep on adding. Okay, so that is taken care of. Account entries are similar to it's fetching from these choices up in here, similar to the general design. The debit side is these are the sign from these accounts that are carried over. If nothing is specified, it goes back to 0, which is what we used in our check calculations. Let's now work on our total gross and the tax numbers on here. And just to recall that these entries will only matter if you're choosing a secondary account here for your double accounting balancing. In other words, this particular transaction is a two-dimensional entry within the scope of this application. So that means what we're trying to accomplish here is let's say you have a bank deposit of $100 because you made a sales in your sales account, and from the accounting principle we know that if the $100 was in the debit side, then the sales entry should be entered into the credit side, and that is what we're trying to automate. Going back, for that to happen, we need to do the two steps. First, we have to calculate the net amount of this transaction on the left hand side, which is what we would assign to our gross value. And we will calculate the gross, and then we will also determine if this entry was a debit entry, and if it was, we will put that entry as a credit entry on that side based upon the type of the account that we have on the second side. So let's accomplish that by using a let statement, and which will have two parameter calculations in it. The first parameter, let's call it gross. And the gross is a simple terms, debit multiplied by the debit sign, and plus credit multiplied by the credit sign. And we use F4 after both entries to make sure that the amount was absolute. So once that's done, now we have to find out if the entry was a debit. Let's call that parameter as is debit. And how do we determine that? That would be if if the gross multiply by the debit sign of the first account, which would be this account F4. If that number is greater than 0, then it would be a debit entry. Otherwise, it was a credit entry. So once we determine the second parameter, now we put the calculation which will determine our gross number here. And that would be if it was if it was a debit entry, that means now we have to put that entry here as a credit entry, which would be the credit sign multiplied by the absolute number of the gross that we just calculated. The credit sign here is the same as the negative of the debit sign, and then that multiplied by the absolute value of our gross. So that's the first item. Now, otherwise, what do we need to do? That would be that we would, otherwise that means the primary entry was a credit, and now it would be debit, and that would be same except the negative sign, which means debit multiplied by the absolute value of gross. So that is done. Let's calculate the if bracket, and we will calculate the let bracket, and that will do the trick. So now we have calculated the gross item, and then you can recall that in this particular case this was still positive, because going back here, this number is positive here, and it was a credit entry. Now maybe we can put one more entry here. Let's say there was a $20 was spent in a, let's say, expense of some category, which is now expense here is a debit account, and let's mark it complete as well. And you can see that even for the rent, this number stays the positive, because the rent would be a debit entry. The first entry was a credit, then in the rent side it would be a debit entry, which is a debit account, and the amount will be positive here, 20. So likewise, same here, if we just put that as a second entry, $20 was deducted from the bank, and if we go and put that as a debit side, 20, our trial balance is intact. So that means the entry is correct. So that does take care of our gross. Now let's work on the tax entries. These three tax column entries are exactly the same as they were calculated in our journal video. So I'm not going to repeat that in here. So you can refer back to the video in the previous video for the journal entry to find out how we calculate the tax in its absolute terms. So once that tax is calculated, now we have to do the same thing, because the secondary entry, or whatever goes into the second account, and the tax payable, they are in the same direction, which means if this is debit, then that would be debit. If this was credit, and that would be credit as well. So the first portion of our formula is exactly the same that we just calculated in our gross calculation. So we calculate the gross, we calculate if it was a debit entry, and then if it was a debit entry, then we just put the absolute of the tax number, because absolute of tax number would be a positive, and tax payable is a credit account. That means it will go into the credit side, and otherwise we'll put a negative sign to make sure it goes into the debit side of the payable account. So that's pretty straightforward. Both of these two done. Now how would we calculate the total effective entry if you choose to put the tax number in here? So let's modify that number, maybe make this as 113, and then put a 13% tax on it. So that means our absolute value of the tax is 13. So 13 will be the taxes. Now our total needs to be $100. So let us just finish our total calculation here, which is pretty straightforward. That is all if our gross number was greater than 0, and then it will be just gross minus our absolute tax calculation. Otherwise, it would be the gross plus our absolute tax calculation. So either way, they will be subtracted in their absolute terms. So that will complete our gross calculation. So that it kind of finishes all of our calculation for this ledger table. One thing I like to add on our key column here would be, because we have a check flag calculated here, whose answer would be either 1 or 0. If we let's just multiply these final calculations for the total, gross, and tax, and multiply by the check number, which would be a 1. But if it fails the check, then all those numbers will go back to zero. That means they will not be dynamically added against this secondary account. So this is just an error proofing additional check. So let's just do that. In the total, what we do is just we multiply it by our check statement. Let's do the same thing in here. Multiply the answer by our check statement, and so on and so forth for our taxes. All right. So if in case that if the transaction entries were not specified, all of those sums will go back to zero and nothing will be calculated. So with that, we come to the end of this particular segment. The link to this file that we just developed is in the description below, so feel free to download and play at your ease. And last but not the least, kindly, if you like the content that has been provided to you, please consider liking the video and subscribing to our channel. We will be very grateful to you. Thanks, and see you in the next segment.